Hello, everyone. We are waiting for people to get logged in. So while we wait, Angel has volunteered to sing. She was singing backstage, and it was pretty impressive.
We were talking about Three's Company. I was singing the theme song. I'm just
Let's
saying.
go. Let's hear it. Let's hear it. I'm
Come and
sure
knock
that
on my door. We'll be waiting for you. We're here for the sip, the sip, the sip. Thanks for joining us too. Do 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 do.
The ma-
mic drop show's
I was
over.
gonna say that's a wrap. We should just
Well
finish it here
done.
because it's as good as it's gonna get.
What I love is the people that are logging in, only a few of them got to hear that. And as they were logging in, they're probably, did I join the wrong? They're like double checking the link, like, what did I just walk into? But when it is cast on, when it's cast on LinkedIn Live, everybody will get to hear it. So thank you for your beautiful singing, Angel, and your and the new opening to the
There
SIP.
you go. There you go. I see Tony said I recorded it. Thanks, Tony.
We don't miss a thing. As people are joining in, we're just giving everybody a few seconds to join and then we will get started.
One Bitcoin. Wow, it's pricey.
Yikes.
Tony, how many Bitcoin to distribute it rather than deleting it?
Boy, there's quite the horse trading going on behind the scenes. We better go ahead and get started. So, welcome everyone to the SIP, a space where conversation fuels connection, collaboration drives innovation, and industry leaders come together to tackle challenges. Just like catching up over coffee or an adult beverage, the SIP is all about meaningful discussion and moving us forward. At the Mortgage Collaborative, we're committed to fostering a forward thinking environment where our members thrive, grow, and make lasting impacts. Today, we're here to share insights, real world case studies, and strategies that highlight the power of working together. And if you thought it wasn't hard to say, please repeat real world case studies over and over again. But a big thank you all for taking the time out of your day, not just to join us for Angel Singing, but for the show. Today's show is proudly sponsored by Figure, the #1 non-bank home equity line of credit in the US, represented by Anthony Stratus, the VP of Lending Partnership. Anthony has also invited Angel Duke, SVP of Product Development at New American Funding, to share her expertise in and insights, infamous in her own right. So grab a cup, settle in, and let's dive into the show. Welcome to you both. Thank you for joining me.
Thank you.
Thank you. Yeah, great to be here.
So, Anthony, let's kick off with the big question. Figure is the #1 non-bank HELOC provider in the US. Is that self-proclaimed, or do you have the receipts to back that up? Tell us
I
a
think
little bit about Figure and your role there.
I think we've gotten quite the growth spurt over the past few years. You know, home equity's been a really hot space, and Figure's been in a fortunate position of having an automated product that we're distributing through a lot of partnerships, one of which you're going to hear about today. And it's really propelled us to the top of the non-bank chart. I mean, there's still a few banks that do more, but even in absolute terms, we're kind of top 10. So that feels great for us. As far as my role over here, I am generally the singer, not quite as good as Angel, but that's what I do here. And in my spare time, I run the partnership channel for Figure. So all our partnerships with lenders, brokers, and everything in between come through me. And while that wasn't the focus of Figure a few years ago, we were more of a direct-to-consumer shop. We've pivoted over the course of the past 2.5 years, where now our partnership channels a lion's share, and it continues to be the growth engine for Figure.
That's awesome. And also responsible for your partnership with the Mortgage Collaborative. And we really appreciate your engagement and enthusiasm around that partnership.
Oh, likewise, it's a great group. We love being a part of it and are grateful for all the help and support from you.
Awesome. And since you both are singers, we usually have some guitar being played at conference. So maybe we can connect both of you with Mark Cunningham and you can share the stage with them to be able to share your singing talents. So, Angel, for those who may not know you, which would be hard to believe if there's anyone in the industry that doesn't, give us a snapshot of your background of New American Funding and the work that you do.
Sure, I appreciate the opportunity to be here too. So a lot of you guys do know me, but for those that don't, I'm Senior Vice President over the mortgage loan product development area. So separate than not the IT area, not product IT, but product development, like true mortgage loan product development, like we're going to talk about here today. I've been in the industry for 31 years. I've been at New American Funding for almost 4 years. And for the people that are on here, and as we talk through this, I've come from small shops and now I'm in a big shop. But we'll try to make sure that we cover all of that for you guys today because I know what it's like to be at smaller shops, medium-sized shops, different institutions, all those types of things. I've done that gamut as well in different roles in the companies. So we'll try to make sure we kind of cover some of that for you guys today because I know it's always a topic of, well, you're from a big company. What do you know? We're going to help you. We're going to help you.
Yeah. No, I appreciate your background, and there aren't a lot of people that have gone different paths to different types and different size organizations, but you and I share that characteristic in our experience. So excited to have you and to learn from you. So let's dive in. So homeowners tapped nearly 25 billion, that's with a B, in home equity through second lien mortgages in Q1 of 2025, and that's the highest volume for this period in 17 years. There's not a whole lot of talk about the record-breaking volume in anything in the mortgage industry right now. But Anthony, I sense this, and I think that you touched on it, but is Figure feeling the surge? And why are lenders across the board leaning into Figure as their go-to for accessing home equity?
Yeah, so I think definitely that stat is accurate, and home equity is kind of one of the really hot areas in mortgage today. And like I said, we're fortunate to have that tailwind. Um, we're definitely feeling it. There's definitely a surge in demand, both from our existing partners who continue to grow, but as well as new partners that are approaching us and that we're speaking to. I think, from my vantage point, it's a trend that's going to continue, right? There's trillions of dollars of home equity that's available, and cash demands for borrowers continue to go up. Unsecured debt and other debt continues to rise. Folks are in many cases stuck in their home because they can't really afford to flip to another house or don't want to touch their existing mortgage. And so there's a lot of reasons why not only is there tappable equity, but there's increasing demand to actually tap that equity. And so we continue to just see a lot of demand. And the other thing that I'd say is that it's something that, while we're doing very well and seeing a ton of volume, there's definitely room for growth. I'm not sure that I'd say that, we're reaching saturation where most lenders have actually accessed this market demand in a good way. And so there's definitely room for growth from my vantage point.
And why are lenders choosing you?
Why are lenders choosing us? Well, I'd like to believe that we've made it very easy and sort of check all the boxes for what makes a good product. And Angel can certainly comment on some of this, but we've tried to design something that's plug and play, end to end, easy to stand up. And the most important thing, and boy, we were educating LOs out there every day on this, we've tried to build it in a way that's LO friendly, where they don't need to invest hours to originate a HELOC. We like to measure it in minutes. So the return on effort is definitely something that's there. And I think that's unique to Figure.
Yeah, I love that. I love that reference, return on effort as opposed to return on investment, because there are some soft advantages that happen that are very difficult to measure when you think of ROI. And Angel, New American Funding is definitely played into the surge of tapping into home equity, and specifically with Figure, you've generated around $32 million worth of home equity loans per month. And that's an average loan size of 100,000. That's a lot of second mortgages. What made you choose Figure, and what do you appreciate about working with them?
Yeah, so that's a great question. So, from a product standpoint, especially from an implementation standpoint, we found that there was ease there to be able to do that. So whenever I'm looking at product, big or small companies, you're always looking for how easy is it to implement an investor? How easy is it for us to implement their product? If they have their own technology, how easy is that for us to be able to implement as well? Like Anthony had mentioned, is it user friendly or not? Is there going to be a lot of training around it? Really, when we looked at Figure, we found that they just checked all the boxes for us. They can check it for a small company, a medium-sized company, and a large company as well, because of all the different options that they have to engage with them. And it really is for us, like, it's a set it and forget it. Like we get it done, we get it implemented. It doesn't take us a lot of manpower to do it. The product gets up and running. We let loan officers know, and then they are driving it from that point, and it is easy for them. And that's so much easier for us from anybody's standpoint of like having to build product out and build, servicing out or interim servicing out or any of those things. We don't have to do any of that. We don't have to worry about any of those things with Figure. And so it really is like, hey, we've done it, we stood it up, we set it, we forget it, it runs itself, it keeps on going. Figure does everything for us. It's fantastic. So it was a no-brainer.
So
Hey,
set it,
thanks for that.
You're welcome.
set it, forget it, and generate $32 million a month in home equity loans. Not a bad model for success for sure. So let's tech a little bit. Figure has teamed up with OpenAI's GPT and Google Gemini to supercharge its platform. Anthony, in the world where AI is reshaping the industry, is this the secret sauce behind Figure's ability to handle massive HELOC volume and deliver a 10-minute or less decision and make it a true set it and forget it type product?
Well, yes and no. I knew we were going to talk about AI and technology and how we implement it. I want to be clear. We are definitely front and center of implementing AI, but it's really not part of our underwrite. I think where AI comes in is that we've taken, even in a process that's as automated as ours is, and we do get to decisions on loans within minutes, like 5 minutes, we actually don't use the AI in making the credit decision. Instead, we have, an algorithm that kind of assesses every loan in a standardized way and comes to a decision within minutes. We've done everything we can to rethink how a loan gets originated and what's really critical and what isn't. For example, we don't use appraisals, we use AVMs. We don't actually pull title. Instead, we do lien matching, which we've, through our algorithm, gotten it close enough to the accuracy of a title pull that we are willing to, accept the minor risks that we have on that. AI comes into play with some of our edge cases where something doesn't fit exactly in our process. So, for example, a trust. You can have a 30-page trust document. Be kind of cool if you could put AI on top of it to distill down the 5 pieces of information that you need and present it to somebody to make a decision based on that. So that's where a lot of the AI has come into our process and creating automation and efficiencies in that way. Beyond that, we're pretty heavy users of blockchain as well. It doesn't really impact originators. I mean, if I asked Angel now, I bet you she wouldn't even know too much about how we use blockchain in our process. But what we actually do for the investor community is load all the information used to originate a loan onto chain, which makes it very, very easy as a loan changes ownerships for new owners to understand how a loan was underwritten. The example I use in mortgage land is, imagine if everybody had access to your Encompass file from the get-go and could always see how it was done. That makes the whole QC process and transfer of ownership a lot easier.
Yeah, that's awesome. You can have access to the entire Encompass file except for the conversation log where you have to filter out what's going back and forth in there.
Essentially.
You can find some pretty salty comments in there every once in a while. So
Somebody have a
make sure.
bad day. Just saying.
I have often, I'll give credit to Christy Sukumnet who coined this phrase. And she's like, listen, the best tech out there is the best tech that no one talks about. And I think that's especially true with loan officers. And when you're thinking about change management of products that they have to use. But Angel, is it really as seamless as set it and forget it? with such quick decisioning process, how are your loan officers utilizing Figure? And make sure that you touch on that no harm, no foul aspect as well.
Yeah, it really is a no harm, no foul. So, all of our loan officers have access to Figure. Obviously, we're using it a lot because of the volume that you're seeing us do there. And so loan officers have really grasped that. They love the technology there. They love that it's a digital loan. I mean, it's a digital application, digital HELOC that we're doing. They love all of the instantaneous answers on it. We're not waiting days. We're not waiting weeks. We're not waiting for a manual underwrites. I mean, none of those things. And the loan officers adore that part of it. And we call it the no harm, no foul internally because it doesn't take a long time and the information is all pulled and done electronically. If for some reason it doesn't go, then we've got a great insight to that customer though. We have an AVM on hand. We've seen their credit, all those types of things. We can understand what's going on. So if we do have to go a different direction, then we've still learned a lot about the borrower for that particular product piece of it. And that's why we say it's a no harm, no foul. Like it's great that most of them get approved. There's always going to be a chance that something doesn't get approved, but you still learned something from that customer to set them up for where you're going to take them next. So we love it. I mean, we have tons of volume that goes there.
Yeah.
That is
And
awesome.
usually you learn that something in the first 5 minutes, right?
That's
It's
right.
not like, you speak to a customer and then it takes a few days to get to that point. You can kind of give them real-time feedback, and there's always other options, right? Like, let's
Always.
be clear, NAF has, I'm sure, many, many options that could service a customer who calls in and says, hey, I have equity and I have a cash need. What can we do? So we pride ourselves on getting to that point very, very quickly. And the best part about it is, one last thing, when we say no harm, no foul, we don't actually pull hard credit until way into the process. All of this upfront work and making an offer and being able to have a dialogue with a consumer about what choices they might have is done before hard credit. So truly, it is no harm, no foul.
Truly.
This is a little bit of a curveball from what we discussed in our prep call and even our notes. But when you say no harm, no foul and finding out early, and Anthony, this is a question for you because I know that you're a man of statistics. What percentage of loans that are submitted to Figure are approved?
That's a great question. So it's hard to give you a direct answer to that, and I'll explain why. We have sort of consider it like an upfront scenario tool. Some of our partners use that very heavily, and if you use that, you'd never actually put a borrower through the application flow unless you already know they're going to get an offer. For those types of partners, you're north of 50% because you've already had a dialogue with the customer. You haven't pre-screened them, but you have run them through a scenario to know what the likely outcome is. So it's really high. If you're talking about kind of random consumers, and some of our partners actually buy leads and have that sort of model, it can go down from there. It can go, as low as 10, 15% pull through. And everything in between. I'd say that NAF is pretty savvy in that they seem to have a knack for knowing when they need to use that scenario tool and when to just get after it a little bit. And each LO is a little different. So I'd say NAF is probably on the upper end of that scale, mid to upper end.
And because there's no cost for putting that consumer through the process, there still is an advantage in getting to know what their credit profile or their lending profile looks like.
That's correct. And that's part of sort of our principles at Figure. We don't charge our partners for that. That's sort of our cost of doing business. And again, we try to make it easy. There isn't sort of nickel and diming with fees and implementation costs and all that type of stuff.
So I know that Figure there are different ways that lenders can use Figure either from a broker or correspondent perspective. But Anthony, can you talk through, for those lenders that are listening who want to get started with Figure, what is the startup time from engaging with you all until they are starting to originate loans?
Sure. So it's again one of our principles, right? We want to meet our partners where they're at. For large institutions like New American, chances are they want to go correspondent with us, have a fully white labeled experience, own the loans and sort of go from there. And that's generally larger institutions that have the wherewithal and patience to get to that model. That takes 6 to 8 weeks elapsed time to stand up. It's not 6 to 8 weeks work, but we do work with third parties that each have their own process of standing stuff up that takes a little time. um, the part that I wanted to add on that correspondent model is, Angel sort of called it a set it and forget it product. And for New American Funding, that's working well. But the little known aspect of what we do is we have pretty deep capital markets expertise too, where if one of our partners, like New American, didn't want to set it and forget it and actually wanted to sell loans direct to investors or even securitize on Figure Shelf, we do offer that optionality, and it is something that some of our larger partners do. On the entire different side of the spectrum, for mid-size or smaller institutions, we have a wholesale platform where loans can be brokered. Same technology. It's kind of funny. We had to de-automate some of the things that we do on the correspondent side to make sure that we make partners do just enough work to make sure they qualify from RESPA. Because otherwise, it literally, the loans for a correspondent client, they could send a link to a customer, and next thing you know, a loan is originated in NAF's name. You can't quite do that in wholesale. But we do have a wholesale model that can get stood up in about a week. It doesn't take that long. And the reason we did that is primarily to give our partners an opportunity to kick the tires and try it out, see what it looks like. And if they like the product and it takes off, fantastic. Then we'll work on getting them to correspondent.
Right. That's pretty quick. And also an opportunity to broker before moving into a correspondent, almost to be able to test going into that environment while you make decisions.
That's right.
All
It's a
right.
great, it's a great way to kind of see it live. The proof is in the pudding, right? You asked if we've got the
Awesome.
receipts. We don't need the receipts. Just try it out. It works, it works.
Awesome. And one of Figure's big differentiators in the home equity space is the non-solicit promise, in that they really are, because it is a white labeled solution, they are helping lenders create their customer basis for life, not to be able to go back and solicit them when interest rates fall. Angel, has this been your experience, and walk us through why this is such a game changer for NAF for lenders listening today?
Yeah, that's a great question. And it was a differential for us. And that's part of the reason that we did engage with Figure. Part of our model at New American Funding is we retain servicing on the vast majority of the loans that we do. And so having our own servicing book and keeping that borrower, as you said, to us is vital. We always are weighing out partners when we know that they're going to take that loan, no matter what lien position it's in, and they're going to solicit behind us. And the fact that Figure doesn't do that is huge. The fact that, like Anthony said, that we have white labeled ours because of our size and done some things that are available to us are huge for us as well. So the customer feels New American Funding, sees New American Funding, and they're not then having this loan sold to Figure and then suddenly getting a barrage of all these mailers and solicits and refinances and all that stuff. They're still really our customer because they're
Yep.
not doing that. And that's huge. And that's harder and harder to find these days. And so if you're looking for outlets, no matter what your size is, that's
Yep.
something you don't have to worry about. You don't have to worry about handing your customer off and then picking them off.
Yep.
Yeah, it's definitely, at least in the first lien position, it's very difficult for small and mid-sized lenders to be able to compete with huge investors who have huge retention teams, who they have all the technology and all the bodies possible to beat you to the punch,
Right.
no matter how you try to create that client for life experience within your organization. Anthony, Figure is definitely they're kind of breaking the mold and truly an innovative partner. And I know through this, you have evolved over the years and adapted to what was needed to be successful, which is commendable to all of you. But what's next on the horizon for Figure?
Yeah, so, again, going back to the principles of Figure, everything we do is built upon sort of speed, automation, standardization, and then capital markets depth and liquidity, where we're happy to connect our originating partners with the capital markets ecosystem. We don't want or aspire to be the biggest lender out there. We actually want to be the technology that powers it for the companies like New American that have the relationships with customers, have the LOs. That's the part that we want to enable and not really tackle. So for us, it's about looking at what other products are out there in the market that could benefit from a lot of what we did in HELOC. And I had a couple examples to talk about. We recently launched a DSCR product. It's a space that we feel is really not that standardized, where automation, speed, simplicity, all those things can really help create a way to originate DSCR loans that's unique to what Figure does, and sort of provides all the benefits to an LO that knows that, hey, I can always do it. It'll always be done in 5, 6, 7 days, however long it takes, and move on from there. And beyond that, we also just last week announced a product that we developed in partnership with Longbridge, which is an interest-only HELOC for seniors, which again is going to be built on the same foundation that we've built, but targeted a different segment of the population, and maybe can serve as an alternative to some of the more difficult reverse loans. And so we're looking to expand. We're going to have more and more products like that, and the beauty of it is we already have many partners that we could distribute these products through, and that's one of the other side benefits, right? Once you're in the Figure ecosystem, you get the benefit of additional things that we develop like this.
Yeah, so let me add one thing about that from an implementation standpoint. This is where your ease of implementation comes from. So because we already have Figure done, we've already set everything up. When they add products, we have meetings with them. We say this is something that they want. We want to add that. Figure will set a date and they roll it for us. Like, we're not doing that. We're not having to go in and program systems and program products and do all of these things in your LOS system and all these other things in your pricing engine. Like, we're not having to do any of those things. So when they come out with these different products like the consolidation and different things and the DSCR, there's your ease of implementation. So that is a huge pickup for no matter what size company you are, because now I'm not taking my resources from a product team or a technology team and having to figure that out and how to get that next product out. And that's huge. That's a huge saver for everybody.
That is amazing. And we have a comment in the chat of Joe loving the partnership with Longbridge, who is also a partner of the Mortgage Collaborative and the interest-only HELOC for seniors. So exciting announcement for all you to look up that came out, I believe, last week. And if there's anyone listening right now and they're not using Figure, they have to be thinking, how did I not know about this? Why am I not working with Figure yet? So Anthony, where do lenders go to learn more so that they can take advantage of Figure's offerings?
Yeah, I mean, we like to put ourselves out there. You can go to figure.com. We've got a whole website for partners where you can kind of get the basics of how the program works. And I'm at Stratus at figure.com. It's we're a small shop in that sense that, you'll get a personal response from me or somebody on my team, and we're happy to give you a demo, show you what it looks like. And again, I'd reiterate, the entry point to broker loans is it's a pretty low bar, right? It's not a lot of work, and it's something that you can have up in a week and see how it goes.
That's awesome. Angel, your insights are always top tier. Do you have any closing thoughts to share with the audience?
Yeah, so I would say, as we're all looking for what is that product and what are we doing, home equity is obviously on the rise. Utilizing home equity loans of any kind are on the rise. Again, I'm going to go back to the simplicity of Figure. You're not having to set up your interim servicing. You're not having to worry about interim draws. You're not having to worry about any of those things. So if you're looking for an easy way to get into that space, no matter what your business is, no matter if you're a bank, whether you're an IMB, it doesn't matter. There's opportunity there. Obviously, that's where the market is going these days. We see more and more increase in it every day. So I would highly encourage you, if you're not in that space, or even if you're in that space and like if you're a bank and maybe your balance sheet isn't going to the areas that you want it to go, let's talk about looking at that, because it's surely going to enhance your business. It's just where we are in the industry at the moment.
Yeah, definitely in difficult times, and squeezed margins, as having been a leader of mortgage lending, or constantly looking for ways to improve efficiency and automation, how to be more cost efficient, but also looking for other revenue streams and products that will help generate revenue. And Figure hits all of those buttons in a very difficult market. So thank you for that. That's a wrap. This has been an incredible conversation, and we truly appreciate the insights that you both shared today. A huge thank you to Figure for sponsoring this episode, and to Anthony and Angel for lending your expertise. And of course, a special shout out to the listeners. It's very valuable for you to hear these messages and carry them forward so that we can shape the industry together. We'll be back next week on Tuesday, June 23rd at 2 p.m. Eastern for the TMC community, and live on LinkedIn at 3 p.m. Eastern. If you'd enjoyed today's discussion, imagine 3 full days of this level of content and collaboration. TMC members, get registered for Boston Now. Rooms are filling up fast. And if you're not a member, but you want to explore everything TMC has to offer, please reach out to me directly. Very excited to share that news with you and to get you within the network. So cheers to you all, and we'll see you at the next sip.
All right, thank you.
Bye. Thank you.
Thank you. Bye-bye.